you know, if it ever happens to you, then you'll know how important that is. Okay, that you can actually do that easily, yeah, without any major hassle. Because for a lot of systems, it's a major hassle to add periods or change periods right now. So I've changed these back because I want to show you that you can also have a period can be a day long. Yeah, you could have 1,000 periods in a fiscal year if you wanted to. Okay, so if I wanted to change this period end here, okay, to let's say halfway through January, okay, 15th of January. Well, I don't like the 15th. Pick the 5th. Well, I'm superstitious or anything. Okay, right. So now it goes from the 1st of December to the 15th of January. Automatically change that one to make sure that it fit. Okay, so the other complicated issue is that if you actually crossed periods, so if I actually ended this on the 2nd of February, let's say, it changes that one, but then it says, well, hang on a minute, we've got a problem here. Yeah, because you've got to change this one as well. Okay, so I'm going to have to change this, yeah, to something like the, I don't know, the 4th of February, and then let me get away with it. Okay, but it's nice in the fact that it stops you kind of creating periods that you know over you can't duplicate periods or kind of miss bits out, and you know allows you to be totally flexible. Okay, so let me come out of there and do because I don't want to do that. Okay, other routines in here are prior year adjustments. Okay, and what this effectively is just a journal. Okay, but it allows you to run your month end, run your year end, make all your postings, and then let's say your accountant gives you 3 or 4 months after a journal to do to correct the opening balances of your profit and loss codes or your balance sheet codes. And all it does is it allows you to do it as a journal, and it just so let's kind of pick a particular code. If we pick this balance sheet code as an example and type an amount in. What it's say is the current brought forward balance was 0, but the brought forward balance for last fiscal year will be 100 now. Obviously, you've got to obviously balance the journal. Okay, what else have we got in accounting? Okay, we've got some reports, obviously, and we have dashboards, business intelligence. So we can see here sales accounts under budget this period and year to date. So obviously, if we're not selling as much as we budgeted, we want to know. And we use the traffic light system to identify really badly under budget ones. So on the expense side, it's the opposite way around. We want to know if we're overspending. So we get a red traffic light if we've overspent our budget. So you can see we've got 105 there. You can also expand these out if you want to by clicking this plus button on the zoom and zoom them back again, print them, refresh them, whatever. So we can. So it's identifying to us underperforming. Under budget sales, over budget expenses, and things like key performance indicators like what was our bank balance this period, last period in the variance, what's our creditors balance, what's our debtors, what's our stock valuation, what's our tax liability. So essentially that's the accounting. Accounting's fairly boring, I suppose, but what we've tried to do is solve a lot of the age-old issues around things like multi-currency stock revaluation and things that were always a pain for people. Thank you very much for listening. Okay, bye.